So traditionally, the difference between a 4861 and 4862 question is in a 4862 question, they normally will have some form of apportionment in a question. So normally all of the 4862 questions have got some form of apportionment in them. So let's start, guys. Just let's look at the required before we do this. So in the required, it says part A, calculate the input tax that can be claimed for transactions 1 to 7. And it says for transactions 2 and 4 also indicate when the input tax, if any, may be claimed. So we need to do timing for 2 and 4. And guys, again, it says if no VAT may be deducted, provide a reason or reference to the VAT Act. And then part B, it says calculate the output tax for transactions 7 to 9. Also indicate time of supply for transaction 8. Okay. And then it says briefly discuss the input tax consequences of transaction 10. Support your answer with calculations as well as reasons or references to the VAT Act. Consider time and value of supply in your answer. Okay, so that's there. So 20 marks on that. Let's go through it and start doing this. So let's start. I'm going to do a solution. Okay, part A is all inputs. So guys, I don't need to do 2 columns. Part A is all input. Part B is output. So let's start. It says clothing is a South African resident and value-added tax vendor with monthly tax periods, so just monthly. Operations of the company are divided into 2 divisions. The manufacturing division manufactures clothing, that's VATable. And the investment division invests in shares held for investment purposes and money market deposits. That is exempt shares. It says SARS accepts the following turnover-based percentages. Local sales, VATable. Export sales, is that VATable or not?
No.
It is VATable.
Yes, but at 0%.
At 0%. And interest and dividends are exempt. Therefore, we are 85% VAT registered. So please, exports are still classified as VATable supplies because your VAT is charged at 0%. It says you're requested to assist with the VAT consequences of certain transactions. All local transactions are entered into with VAT vendors, and all amounts include VAT unless otherwise stated. So all amounts include VAT times 15 over 115. Okay, so all amounts include VAT unless otherwise stated. So guys, what I need you to actually just bear in mind, okay, with this question is, as we go through something, what you need to do is you need to just bear in mind that as far as this question is concerned, okay, you need to ask yourself, are you doing manufacturing? Are you doing investments? Or are you doing both? Because if it's manufacturing, you claim 100% of the VAT. If you're doing interest and dividends, you claim no VAT. And if you're doing a combination of both, you're going to claim 85%. But I'm going to show you now in the question. So it says the procurement manager traveled to Botswana to purchase a consignment of traditional African beads for its use in the manufacturing division. The return airfare amounted to 12,346. So guys, what happens with international travel? Zero rated. International plane flights, 0 rated. It carries on. It says the hotel bill was paid by the manager on behalf of clothing whilst in Botswana. So what's going to happen? Hotel in Botswana, 0, not SA VAT. So you can't claim it. Says, yeah, and that's there. Okay. And then it's got meals as well. So what are you going to do? Meals, 0, not SA VAT. Okay. And I'd label it as number 1. Let's carry on. Number 2, an order for traditional African beads was placed at the supply in Botswana on 12 May 2021. The goods entered South Africa at the South African Botswana border post, the designated commercial port, on 30 August, and arrived at the factory on 2 September. Okay. The customs duty value of the beads was 860, import surcharges of 7,500. So what are we going to do? Import of beads. Okay. Customs duty value. How much is it equal to? It's equal to 860,000 Rand per the question. Do we need to add 10% onto it or not?
No.
No.
No, because it comes from a BSLN country, Botswana, Swaziland, Lesotho, Namibia. So we don't need to add the 10%. Do we need to include the import surcharges onto it?
Yes.
Yes, 7,500. 867,500 times by what percentage?
15.
15%. Remember, it doesn't include VAT. So it's going to be 867,500 times 0.15, 130, 125. That's how much input VAT we would be able to claim. It also asks for transaction 2, when you could claim it. So looking at the question, when could you claim it? If you don't know, what are you going to do? You can go and look and find imports. That's one way. All right. Goods which are entered for home consumption in terms of the Custom and Excise Act shall be deemed to have been imported on the date they are so entered. So what date did they come into the country?
30 August.
30 August. Therefore, you're going to account for it on 30 August. That's your time of supply. Are you guys comfortable with that? So if you needed to do something. Next one. It says the city council bill for factory premises amounted to 22,600 in total, 18 for electricity, 42 municipal rates. Okay. So electricity was how much? It was 18.4 and the rates was 4,000. How much was it?
4,200.
4,200. Thanks. Okay, cool. So can we claim VAT on electricity?
Yes.
Yes.
Sure, no problem. We can claim VAT. Can we claim VAT on rates?
No.
No.
No, it's exempt.
It's
Zero
zero rated,
rated.
huh? Please, rates are zero rated. Okay, so 18,400 times by 15 divided by 115. 2,400 for electricity and 0 for rates.
Stephen,
Next one. Yes,
don't we times it by 85%?
by 0%.
85.
It's a
Sorry?
direct expense.
Oh, wait, sorry. The electricity is used for the whole business itself. What did it say in the question? Countable for what?
Factory premises.
So do we need to times it by 75%?
No.
No. Okay. It says office space is rented out a separate location from the factory premises. These offices are used for all admin functions. So because this is factory premises, that's 100%. This is entire business, so it's going to be 75%. Oh, sorry, not 75,
85%.
85, sorry.
85.
Yeah, sorry. It was 85. Yeah, 85, yeah. Guys, and it says the total monthly rent for August is prepaid on 25 July and amounted to 27,000. Now, guys, this is one of the ones where they said you need to do time of supply. So, guys, it's rent. It's a normal rule. When do we normally account for rent? On the earlier of what or what?
Payment.
Invoice of payment.
Payment or accrual or invoice to.
invoice or payment? So invoice is August, payment is 25 July. So when are we going to account for it?
July.
25 July.
25 July. And how much are we going to account for? It's 27,000 Rand. So 27,000 Rand times 15 over 115 times 85%, because it's used in both parts of the business. So let's just do the calc. $3,049. It doesn't look right. Sorry. Did I type it in properly?
You said 27,500.
Did I say 27,500?
Yeah.
Yeah, sorry. My mistake. 2993. Finger problems. Didn't look right. Okay, cool. And then obviously you'd sit there and say July VAT return, because they asked you for timing. Next one, number 5. It says bus tickets and taxi fare on behalf of factory employees traveling within the borders of South Africa to work amounted to 8,550 for the month of August 2021. So bus tickets and taxi fare, what happens with bus tickets and taxi fare?
Exempt.
It's an exempt supply. Transport of fare-paying passengers by road or rail is an exempt supply. So 5, bus or taxi. Okay, it's an exempt supply. And you put 0 down. Next one. Number 6, the business bank account was charged 5,630 for bank charges, 13,780 for interest paid. Exactly the same as what was in the 4861 test. So bank charges were 5,630 times 15 over 115.
Times 85.
Okay. And it's used for the whole business, or is it for the manufacturing account? Sorry, I didn't.
Whole.
Manufacturing.
You see, it says manufacturing division. Okay. So you just need to read carefully when you're doing this. So this would be times by 100% because it's only for the manufacturing division. So let's just do the calc. 5,630 times 15 divided by 115 gives you 734 Rand. Okay, and then interest, financial service, therefore exempt with a dash. Okay. Number 7. Says the bank account of the investment division was 2,340 for bank charges during the month of August. Cash dividends received amounted to 214. So this is the investment division. Does it have any VAT in the investment division?
No.
No. Therefore, what's going to happen? 7, bank charges, exempt, 0. Okay, and what they're also going to ask you to do is now do the output VAT. And what happens with dividends for output VAT, guys? What are dividends?
Exempt.
Financial service, therefore exempt. Because that was in note 7 as well. Okay, cash dividends. Number 8 says invoices were issued for local sales to various customers amounting to 379,500 during August. Only 322,000 of these sales were paid for in cash. The balance 57,500 is still outstanding as debtors. Now, guys, as far as this is concerned, it is totally irrelevant because you're registered on an invoice basis. So which number are you going to use for your VAT calc?
379.
379,500. Sorry, it's back one, sorry. So sales, 379,500 times 15 over 115. It is only for the manufacturing division. So it's times 100%. And 379,500 times 15 divided by 115 is 49,500. Okay. Let's carry on. Number 9, the consignment of manufactured goods was exported and delivered directly to a customer in Namibia. The customer's invoice 133,000 for the goods. Exports, what are we going to do? Who took it outside of South Africa? Us or someone else?
We did.
We did. So are we allowed to zero rate?
Yes.
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 So 0. It was quite amazing. Sorry, I just want to give you an insight. I set an exam for one of the other universities for their CTA class. And it was absolutely amazing how many people got something like this wrong. I was very, very surprised. Okay. What I did, just one thing that you just need to bear in mind with exports. If you take it offshore, you can zero rate. If they pick it up in South Africa from you, you shouldn't zero rate. You should charge VAT, and they must claim VAT at the border post. So please just have a look to see. And you can never zero rate if you're selling to a South African company. If you're selling to an SA company, I don't care whether the other company is taking it offshore, you cannot zero rate to them. They need to claim the input VAT back from SARS. Okay. So just bear that in mind. I was very surprised that so many people got that wrong. When I
So
set the exam.
basically where the transaction took place. So
Well,
basically
you're
the
not doing-
transaction took place.
You can't export to a South African.
Yeah, because then it's not, because then
Do you
it's still
understand? So
in the
inside those rules,
borders.
just please just be careful with it, because exports pop up always in tests, and there's always a different variation on exports. Okay, so just bear that in mind. Okay, next one. It says, now this is the one that they ask you to discuss briefly. So guys, a new single cab bakkie with a value of 478,800 was purchased, delivered, and brought into use. Single cab bakkie, can you claim VAT on?
Yes.
Yes, you can. So where do you think you're going to start with the discussion? You're going to start with, we can claim VAT on a single cab bakkie because it is not a motor car as defined. We can claim VAT of 478,800 times 15 over 115. It's going to be used by the financial director of the company exclusively for business purposes for both divisions. So guys, because it's used for both divisions, what are we going to have to do? Multiply by what?
85.
85%. So we know what the number crunch is. Okay. It says the full cash value is financed by finance lease. So immediately you should just go to your books where you've been asked to tag. Let's find what it says. The first thing it says is an installment credit definition, and I've got no highlighting. So what do you think you should write down in a solution if it says, if I've got the installment credit definition? You need to say, this conforms to the definition of an installment credit. What else should you write down? You should write down the installment credit value of supply will be the cash value of the supply, which in this question is equal to how much? 478,800. Okay. What else should you actually write down here? You should say the time of supply is the time that the goods are delivered, or the time that of the payment of the consideration, whichever time is earlier. So when did we pay? It says First installment was on 31 August. Okay, or when it was delivered. When was it delivered? 1 August. So we're going to choose 1 August as the time of supply because that's the earlier of the 2 days. Okay, so we can claim it on 1 August. It's also got individual payments here. So I would say there's no VAT on the individual payments, and it's also got interest here. I would say in the solution that there's no VAT on interest because interest is an exempt financial service. And that's the way that I would go through and do this. Let's have a look to see what they did inside their solution from a number crunch perspective. There we go. Supply of a Bakkie standard rated supply, VAT would be charged by the dealership. Bakkie will be used to make taxable supplies. Input VAT can be claimed, not denied as a single cab Bakkie as it's not a motor car. Finance lease fulfills the requirements of the definition of installment credits. Value of supply, open market value, 478,800. Amounts of VAT, that's a calc. However, the expense is used to make both taxable and exempt supply, so times by 85%. Time of supply, earlier of time of delivery of the goods or when any payments made. Therefore, full amount claimed as input VAT on 1 August. And guys, I would have also written down as part of the solution, no VAT on interest and no VAT on individual lease payments, but they haven't got it inside their solution. But it's quite simple to get the right marks for answering. Just trust, if you've got your book tag properly, you should be fine. Okay, so just bear that in mind. Okay, so that's there. Okay, part B. It says Naledi Monering, age 34 years, is an SA resident and a successful radio talk show host. Naledi holds a master's degree in broadcasting from the prestigious University of South Africa. Naledi has been employed by Radio 705, a SA resident broadcaster since 1 March 2015. She earns a gross monthly salary of 42,000 Rand. Just let's go have a look at the required. That's part A, part B. There we go. So it says, discuss, supported by calculations, the normal tax implications of the salary received by Naledi Monering from both her South African employer and her American employer for the 2021 year of assessment. That's for 8 marks. Provide references to relevant legislation. B, briefly discuss the income tax implication arising from Naledi Monering's immigration to the United States. Provide references to legislation. And 3, discuss with relevant reference to relevant legislation whether or not Naledi will qualify for a full primary residence exclusion on the townhouse. Okay, so we need to cover all of those. So based on what I've just read now, she earns a salary in South Africa for her work in South Africa, and she's an SA resident. So what are you going to put inside a solution from a discussion perspective on this? Guys, what's really important? How do you think you're going to start it? You're an SA resident, therefore you get taxed on what?
Worldwide income.
Worldwide income. Please start with that. And then with the salary, the 42,000 Rand, it's going to be included in her South African income. So it says there, in a quest to be globally competitive, Radio 705 seconded Naledi to Dallas, Texas, United States of America. She was assistant producer on The Breakfast Show for 6 months, commencing on 1 June 2020 through to 30 November 2020. Okay, during this period, Naledi entered into an employment contract and agreed to pay 4,000 Rand per month, $4,000 per month. Since 1 June 2020, Naledi only visited South Africa once for 7 days to celebrate the 95th birthday of her grandfather, which took place on 3 September 2020. Naledi returned to South Africa on 10 December. She was out the Republic for a total of 186 days. Okay. While she was seconded to Dallas, her employment with her South African employer was temporarily suspended and reactivated on 1 December. She continued to work for Radio 705 from 1 December 2020. For the period 1 December to 10 December, she took annual paid leave that she used to tour the United States. On arriving in Dallas, she reunited with her high school sweetheart, Kagiso Glaudi. Kagiso and Naledi were married out of community property on 15 November. She formally immigrated to the United States of America on 1 February after resigning from Radio 705 from immediate effect from 31 Jan. From 1 Feb, she was a resident of the United States only. And then there's following assets. So let's just discuss the part A of the question. It said, discuss how her income will be taxed from the radio stations. So 6 months she's in America and 5 months she's in South Africa, because from 1 March and she resigned on 31st of Jan, that's 11 months. So 5 months in South Africa. So she's taxed on worldwide income. For South African income, it's 5 months salary. So 42,000 times 5 to 10,000. And that'll be included in her South African gross income. Guys? Then for the salary she earns whilst overseas, they need to give you an exchange rate. Let's see where it is. There we go. Average rate 14.68. Guys, for individuals, individuals can choose spot or average, whichever one they choose. But in this question, they only gave you average. So you're going to have to use average. So what are we going to do? We're going to go 4,000 times by 6 months times by 14.68. 52,320. That's going to be included in gross income because you're a South African resident being taxed on your worldwide income. And then, guys, there's a section that you need to know. And this is a huge spot, guys, because this one's changed this year. Okay? This one is changed this year. So what's going to happen, guys? It's section 10.10. Where have I got it on here? Let's just find it. Where's 10.10? There we go. 10.102. Exempt services outside South Africa. What are the requirements? It needs to be received by an employee. She was an employee. The employee needed to be outside the Republic for more than 183 days. She was 186. For a continuing period exceeding 60 days, she was more than 60 days because she came back for the grandfather's thing for 7 days in the middle, but that definitely would mean it's more than 60 days either side. It says not apply 92G. That means you shouldn't work for the government. She was not working for the government. And it says 1.25 million. The first 1.25 million will be tax-free. So what's going to happen, guys? You need to go through this. You need to say, because she is an employee and she was outside the Republic for more than 183 days. And then in brackets, you'll say outside for 186 days. And there was a continuing period of more than 60 days. So you need to quote some dates from the question. And she does not work for the SA government. This is going to be exempt, limited to 1.25 million. Okay. So let me just open up the solution. There we go. Just have a read through. Guys, originally they said that this section was going to stop. They've now changed their mind and they've put the 1.25 million thing in it. So originally they were going to reverse the section entirely. They've changed their minds with it. So in the budget speech last year, they said they were going to get rid of it, but they're not getting rid of it. They didn't get rid of it in this section. That's why I say it's a new development. So you need to know it very, very well for purposes of this exam. Okay. So it's there. Matter of fact, if you look at your act, it's actually got something in there that says if it's only in the current financial year, you only need to be overseas for 117 days. So yeah, this is very, very important for the test for both 4861 and 4862. I really do think you're going to get it. Okay, let's just move on. Part 2. What does it say? It says briefly discuss the income tax implications arising from Naledi Monoring's immigration to the United States of America on 1 Feb 2021. Provide references to legislation. So guys, remember, here's the tag. I got it opened up earlier. Where was it? That one. There it is on immigration. You just need to write all of that stuff down. Okay. When you emigrate, what are you deemed? The person must be treated as having disposed of each of the person's assets on the date immediately before the day they cease to be a resident and have reacquired the assets equal to market value. Okay. Deemed to end on the date immediately before the date the person ceases to be a resident, does not apply to movable property or permanent business establishments. Okay. So, and then you need to apply to whatever's in the question itself. So inside this question, there were assets given there. Mercedes-Benz A-Class deemed to have disposed of it. Okay. But it's a personal use asset, therefore it's excluded from CGT. The townhouse is immovable property, therefore you're not deemed to have disposed of it when you emigrate because it's immovable property and it's physically excluded. You can see it does not apply to movable property in South Africa. Okay, so I'm just going to go through to that solution again. There we go. Have a read through. If you're a good auditor, you would have picked up that it says available 6 and there's only 5. One of the marks has been left out. There was a mark over there that was left out, by the way. So for section 9H4. So they forgot to put it on. There's an extra mark there where I've got my little cursor now. Let that be an extra 1. Okay, let's carry on with the question. Part C, it says discuss with reference to relevant legislation whether or not Naledi will qualify for a full primary residence exclusion on the sale of the townhouse. Okay, so let's just have a look here and let's just read through. It says Naledi sold the townhouse on 15 Feb 2021 for 1250 to Mr. Smith, not a connected person and SA resident. Prior to immigration, Naledi used the townhouse as a primary residence. From 1 June to 30 November 2020, Naledi let the house for her colleague at a market-related rental of 15,000 per month. Now, I just want to actually just ask you. It says discuss whether or not she will qualify for a full primary residence exclusion. Okay, and this is out of how many marks? 8. So often in exams, they give you a question where you look at it and go, oh, that can't be out of 8. Jeez, that's a lot of marks. So let me tell you what I want you to do. I want you to actually, this is just exam technique. you'll go find where all the exemption, the CGT is. Okay. And it's over here, guys. So paragraph 49 deals with non-residential use. And schedule 50 deals with overseas or far away 5-year rule. So that you'll have tags for. But this is not enough to write 8 marks on. So what you're going to have to do is you're going to have to open up your books and actually start reading the actual sections themselves. Okay. So I'm just going to go in and I'm actually going to load up those sections. So Income Tax Act. Do you guys understand that sometimes they just give you something, and what they do is they sit there and say, you'd never ever expect 8 marks. You'd expect 1 or 2 marks on something. But what happens is you're going to have to go through the sections in detail. Because otherwise you can't get 8 marks to write down about. Because they didn't ask you to do any calculations. They just said, will she get her full primary residence exclusion here? That's all they've said. So will she get it? They didn't ask you to calculate it. So you're going to have to go through all of the sections in detail. And let me just show you how I would do that. So just let's get to paragraph 49. So I would have gone and found 49 and 50 off my list. Sorry. And I'd look there and say non-residential use. It says where natural personal special trust disposes of an interest in a primary residence or disposes of an interest in primary residence that was a primary residence for part of the period on or after the valuation date of which a person held that interest, or where the beneficiary, so we've got there, says then paragraph 45 must apply only to the portion of the capital gain or loss on disposal of primary residence that is attributable to the period where the person used it as a primary residence. So I would write something along those lines down for saying paragraph 51 says, if you don't stay in the residence, you need to apportion for the period that you were not staying inside the residence. Then I look at 50 rental periods. And it says a natural person or beneficiary of a special trust or a spouse must for purposes be treated as having used a residence. So they say you've used a residence during any continuous period of absence therefrom not exceeding 5 years. So she was only away for 6 months. So that's fine. While that residence is being let, if. So I would write something down saying that, you know what? She let it out for less than 5 years. So paragraph 50 says it can still be your primary residence if you let it out for a period not exceeding 5 years. But we now need to carry on reading because this is 8 marks. You need to go through the whole section. It says that person, beneficial spouse, resided in that primary residence for a continuous period of at least 1 year prior to and after any such period. So you're going to say, that's not the case here. She resided in it for more than 1 year before she left, but after she came back, she sold it 2 or 3 months later. I can't remember in the question. Therefore, this section cannot apply, but you've got 8 marks. You still got to write stuff down. So paragraph B, no other residence is treated as a primary residence of the person. While she was in London, she did not buy another residence. Therefore, paragraph 50B would apply. And the person or the spouse was temporarily absent from the Republic. Yes, she was temporarily absent. She went to work in the UK for 6 months. So you'll sit there and say, that applies. B applies. C applies. But, okay, A does not apply because she was not in the period for at least 1 year after she came back. Therefore, she cannot get the full primary residence exclusion and she needs to apportion stuff on a time basis. Okay, so let's just have a look at what they did in their solution. There, just have a read through. Just guys, as you're reading through this, this is bloody difficult. In every single board exam and most UNISA exams, I'm talking where you've got at least 100 marks in a paper, there's normally one of these where they just give you a curveball. It's something that you basically know the answer to, but normally you would expect it to be 1 or 2 marks. If it's out of a lot of marks, you just need to go through and read through the sections part by part and apply it down into a solution. And you just need to understand that's what you need to do with it. And this type of question is the worst answered out of all the types of questions in exams. Because unless someone tells you this is how you're supposed to approach it, it's very, very difficult. So just bear this in mind. Can you see they've just gone through each section, section by section by section. They ask you to quote sections in this. The required said quote sections. That's why you needed to quote sections. Okay. So that's this question.